Hello guys and welcome to a new video. This one is gonna be a little bit different because we're gonna do a trade breakdown. If you're new to the channel, if you go down maybe last year on this channel, I was posting a lot of technical aspects of trading. So I was posting a lot of concepts that I use, breakdowns, market analysis that were always on point. So because lately I've been doing a lot of videos about my prop firm journey, my fund capital, all of that things, I want to go slowly back into presenting a more technical aspect of trading, even if I believe that trading needs to be very simplified and very easy. A lot of people like to overcomplicate trading while it's actually very easy. The hard aspect of it is gaining capital, using a good risk management, and then basically putting it all together to have a very good and profitable trading plan. So in this video I want to do a breakdown of a GBP USD trade that brought me around $17,000 in profit over the course of basically one day. So this setup was taken, it was a buy that went for 110 pips, something like that. I closed. The setup did run for 200 pips, which was a big move. But I want to give you, because this is, I consider it an A+ setup, how traders say. It was a very good setup that I took. I let it run and it brought me some amazing profits. So as you can see, you have basically the profit, the trade profit here, GBP USD, and also a withdrawal, just to know that the account is real. So it's not a challenge, it's not a demo account or anything like that. $17,000 profit on GBP USD trade, which ran for 115 pips, and it was also overnight. So this setup was taken, it went overnight. I closed it overnight. I will show you why. Then I had a nice, I just took a quick payout just to show that it's a real account, so 1.2k out, and then I had some more quick scalp trades on this specific account. So I don't really like showing profits like this, but I noticed that people kind of forget, so I started posting more payouts on my Twitter, or X, how it's called. So if you want to check out my Twitter, it's in the description. I did start posting more payouts because people may think like I'm not making money or anything like that from trading, just courses, because that's the reality of a lot of mentors in this space. They make more money from course sales, signal sales, and all of that than actual trading, which I think is a very bad thing. I do still trade every single day. And before getting into the breakdown, I want to talk a little bit about December, because I've seen this coming every summer and every December, especially in the trading community. Everyone has their own opinions, like, oh, summer is not good for trading, and then December is not good for trading, January is not good for trading, and all of that. I just wanted to give my honest opinion. In my experience, I think if you have a very profitable trading system, if you know how to trade, you can trade at any time. That is why I really love my trading style, because I can adapt it to any market conditions. So let's say somebody has a very good trading strategy, but it's a swing strategy, and I did talk about this with some friends the other day, where they have a very good swing strategy that brings them very good percentage return every single month, but they just said in December it's impossible to use it because the market is not that clean, is not moving that good. And that's where I noticed how lucky I am, because I didn't really focus on developing one strategy, one mechanical strategy. I just focused on really understanding the market, because I really focused to understand how the market moves, why it moves, and when it moves. And that was the most important thing, because now I can trade any time frame. So I can trade the 1 hour, the 4 hour, the daily time frame, 5 minute, 50 minute, 1 minute, even the seconds time frame. So I can make profit basically no matter what, as long as I respect some rules from my trading plan. So my honest opinion is that if you know how to trade, if you're a profitable trader, it doesn't matter what month it is. I've had very good months. For example, this year January was one of my best months. I started the year 2nd January, I took a 10k trade just because there was a very clean setup. Also December was very good last year. Probably this year is gonna be good also. And then summer is very good. Yeah, of course it's gonna be very hard when price is just trending in one direction. It usually does on the summer, but you just adapt to the conditions and you trade. So that's my honest opinion. December for me personally, because I kind of hit my profit targets in terms of capital and profit. I made around 1.5% in profit on all my capital. So for me, I just want to end the month to focus on other things, to enjoy the holidays, and it's not really worth it to basically risk my normal risk. So if I see a trade, maybe I'm gonna risk a 1/4% here and there just to make some more money, but that's about it. But that's my personal opinion. Usually I just like to trade until the 21st, 22nd of December, and then in between Christmas and New Year's, and then just from the first year of the year started very strong strong, and that's how the year is gonna go. If you start the year good, it's just gonna continue good for the entirety of the year. But let's go on the charts and I'll give you guys the GBP USD breakdown. Alright, so now that we're on the charts, let's break down the GBP USD trade that I showed you. Starting from the monthly, we can see that last month was a very bullish close. So price gave a nice reaction from this demand area at the bottom where we created a new high, price retraced, give a nice impulse, and then if we go down the time frames, we can see weekly time frame came down this area, gave a nice reaction, price started moving to the upside, and then previous weekly was a nice bearish retracement. Coming down on the daily time frame, I was looking, as you can see, we had the demand area right here where price started to go to after this impulse, after this news high. So I was looking for buys, that was the higher time frame bias. We had the impulse, retracement, reaction from the demand area, a lot of rejections, and then price had a very nice impulse to the upside. Now let's go down on the 4-hour time frame. 4-hour, we had those wicks here. I love taking wicks like this because basically this is the area where price gave an impulse and created a new break of structure. After liquidity was swept from this area, price created a new high. That was the area before the big volume coming in, and then had a nice retracement and continuation to the upside. So that was a possible area for reaction. I wasn't really looking at buys yet, but you can see daily here, 4-hour here came down, wicked it twice, and then price failed to go above and then spiked up and basically created liquidity on both sides, took liquidity on both sides and was just ranging in this area. So when this happens, I maintain my hard time frame bias. So a lot of people get stuck inside this range and they look for buys, they look for sells, they don't really know where the market is headed. For me, I just knew that when I'm lost in the lower time frames or I don't know where price is heading, the best thing you can do is find out where the higher time frame is going. So I knew the higher time frame is bullish, so obviously I wasn't looking at buys. Now, because price basically had a spike here with news on Tuesday, price failed to make a new low. So even if it took liquidity from these highs, I was expecting for price to go lower. It failed to create a new low, so that's when I knew price will most likely head to the upside. So it's just liquidity games and zones. You see the 1-hour zone here. Now the next volatility time that was gonna come in, because it's December, it's not price is not moving that fast, it's not moving that much. News are gonna be a big mover. So that's why basically I waited to see where the next news event is. The next news event was gonna be FOMC meeting. So if you know, FOMC is a lot of volume coming into the markets, especially when Powell is also speaking afterwards. So I knew that price will most likely move then. So that's why basically, because I saw these lows being respected, also very important to see that New York has put the lows in this area. So we had one New York low here, and then we had another New York being put, a New York low being put here that respected this one. So when we have something like this, then it tends to get respected more often. So my first point of invalidation was basically this low, and then the ultimate invalidation point was this one. Now, because price spiked up, came down, created a new New York low, and then price rebounded to the upside, I wasn't looking at sells because price failed to break below. So I just waited for the next day to come in, and when price came close to this New York low, basically this area, I went long. So a mistake here was just timing, because I entered during London Open. So I was expecting London to basically, because we had this drop down in Frankfurt, I was just expecting London to recover, come back up here, and then from there move to the upside. But unfortunately, basically London just played around. I did use a bigger stop loss because I knew that FOMC is just tonight. So I wanted to let price just play fine, not interfere with it. Couldn't really watch it because I was very busy that day. So I decided to cover this low, and when I see basically a point of invalidation, I like to take a few extra pips, so like 5 pips below that low. That's where my stop loss was. So London Open came in, price broke to the downside, took out this New York low, gave a V-shaped recovery, a break of structure to the upside. This is where price kind of validated my idea more, and then New York Open came in, dropped down, created a new low, so took out London low, respected this old New York low, gave a nice reaction, and then as you can see right before news, price started to go down to basically take out this New York low, just to take it out. So that's what the market does always before having a big move. I just want to get the best possible entry, so I just let the trade play out. I mean, I was thinking about closing at break even and then look for a re-entry, but I just couldn't watch it, so I just decided to let the trade play out. So price came here and then basically very close to my stop loss, but I knew that if it doesn't react from here and starts going up, then price will most likely dump. So I just waited very patiently, and then FOMC hit and we had a very big candle to the upside. I knew that price was most likely setting for a big move because FOMC usually just goes one direction. So I had a big move and price continued to the upside. I knew just looking at the just look at the 4 hour and the daily time frame. Just 4 hour wasn't that clean, but daily time frame was very clean. Like, look at this. So I knew if price gets close like this, it will just blow above the highs, but I just decided to take the profit the next day. So I didn't really want to hold it and watch it. Was quite a lot of profit, so it's best to just take it. I was basically waiting to see the next day price coming back, not that low, but maybe this area, and then looking for a re-entry, but unfortunately price just continued to the upside. So I let the trade play out over the night, and then when basically London Open came in, I just closed the trade at a 1 to 3.8, 114 pips as you saw, 15 lots, around 17k profits, and then price continued for basically 140 pips more, which does hurt, but again, December and all of that, I have to stick to my rules, so that's why I took profits early. But yeah, this is the trade breakdown, very simple, and this is what I use to make 6 figures a month. Very basic stuff. So hope you guys enjoyed the breakdown on GBP USD, the $17,000 trade, 110 pips, a very nice setup. If you'd like to see me break down more charts and more trades that I take, just leave a comment down below, like this video and subscribe, and I'm for sure gonna make more breakdowns because I love making them. I love having a very good trade that just runs perfect, has all the confidence is needed, it just hits the target, especially when a lot of people were bearish on GBP USD. It's very nice to be right and stick to your bias. That's very important because that's what's helped me a lot during my trading years, was just sticking to my bias, because I've noticed that I am right most of the times. So when people were bearish on the pair, I stuck with my higher time frame bias, I stuck with the buys, I took the buys, I executed them, and then I just waited for the trade to play out, and of course it paid very well. So don't forget to subscribe. Let's hit 10k subscribers on this channel if we haven't already. I don't know when this is gonna get posted, but hopefully it's already at 10k. If not, let's hit that subscribe button to hit 10k subscribers, and of course like this video and comment what you like to see next. Thank you guys for watching, and I'll see you in the next one.